Yo guys, welcome to the new video. In this video, I will explain about the daily cycle. So the market moves from the liquidity point to the liquidity point on a consistent daily basis. Always the Asian session is liquidity. This violet box is Asian session. And always the Frankfurt will take the low or high of the Asian session and London will continue the move and New York is the reversal. So basically there are some variations of the daily cycles, but in this video I will clearly explain all the variations of the daily cycle. So watch the video till the end so that you can know. Always you will have the daily liquidity cycle. So first thing is Asia. Asia always create the liquidity for the day because without liquidity the London session traders and the New York session traders they can't execute their positions. So they always need the retailers to get trapped out. The retailers will trapped out here, the retailers will also get trapped out here. So they will do the inducement. Inducement means they will make the traders assume in the false direction of the trades. They will think, retailers will think this is the break of the structure and the market will fall down. And also this trend line something, they will draw some trend lines and they will think because of the retail concepts and they will the short positions. The market makers and the algorithm exactly know where the liquidity will be because they have got lot of data, lot of scientists behind the algorithm, and the algorithm will always upgrade about the people behavior because they got order book. Because if you see the liquidity is like this in the Asia session. Simply what Asia session did, it took all this liquidity towards the down. There is a trend line liquidity, right? Simple. The Frankfurt took a high, it induced this trend line liquidity and took all this liquidity. This is what happens every day in the marketplace. It took the liquidity and it moved. It again ran to the stops and reversed. Same thing happens over and over and again in the marketplace. So they first need to build up. They need a build up of liquidity like this. Build up means they will induce the traders like this. False channel type of liquidities, or they will create equal highs, or they will create equal lows, because this is where the liquidity will be there, because the retailers will buy here, sell here. So they will create a fake retailers pattern and then they will do the inducement in the London session. This process is also called as the spoofing, because if you see here, I will show you some clear examples of the spoofing. So one second, let me search a clear example of the spoofing. Yeah, here is the clear example of the spoofing. If you see, when coming into the day, you can see the clear trend line liquidity is building up. Trend line liquidity, and also the retailers are getting here trend line liquidity. So at exactly London Open, the price aggressively ran this liquidity. So the retailers will think the price will go down to the moon, because they exactly know the psychology. So that's why they print these type of candles. If they print wicked candles like this, nobody will sell. If they print full body candles, many retail people will get scammed and they will be sell positions and target stop losses here, and they will target this liquidity something. But we exactly know the trap of the day is done, because the London took the liquidity and then it's ready to reverse. And also for the confluences, you can use order blocks. Just for the confluence sake, you can use the order blocks for the application. That's it, done. Same shit happens over and over and again in the marketplace. If you see here for this day, if you see the daily cycle variant, liquidity and also the liquidity is building up here. The market will take this liquidity. This is the target. Exactly after the Asia, it took the liquidity up and then the market reversed. Same shit happened every day. See, same shit over and over and again. Literally same thing. And this is the example of the spoofing. Clear example. If you see here, the market is building a clear trendline liquidity. There will be lot of buyers coming into this area. Lot of buyers. So that's why these type of reactions came. So When this break of the structure happened with the huge falls, retailers think the market shifted the direction and they will sell here, and stop losses will be here. So that's why the market took all the liquidity and then the price reversed. This is the very important of the daily cycle. So when coming into the daily cycle variance, there can be many variants in the daily cycle. So always remember, Asia will create the build-up of the day. It will create the build-up. We can exactly know where the market is gonna go if you read the type of the build-up. For example, if you see the build-up is towards the downwards, so we can expect a down day. For example, if you see the build-up is here, there is a double tops and the liquidity, lot of trend and liquidity, so that's why we can expect a up day until at least the Asian liquidity is taken out. And always, not always, maximum times, if the sweep of the Asia or any liquidity from the left, because we use some liquidities from the left too, but this is the beginner session, right? So in the upcoming videos we can discuss what liquidities we should use from the left and what confidence we can use. So if the sweep is happened in the London Open or Frankfurt Open, it is very high probable sweep. So we will discuss the entry pattern in the upcoming videos too, but this is the basic thing that happens every day. This is the daily cycle. So build up Asia session, sweep happens in London, London continue the move, and the New York can reverse and mitigate something and close the day like this, or this is the another variant of the daily cycle I will show. We'll bring this down here. This is the Asia liquidity, London, New York can also continue the trend. These are the two things that can happen most of the time. 99% of the time, those are the two things that will happen. I can show many examples like this. Like this, if you see liquidity low taken out, what's the exact time here? You can see 15. The market reversed. Choop. Again, took the liquidity. Again, same thing, guys, happens over and over and again. If you see, same here. You should just understand the liquidity where the market. You should have also supporting liquidity for targeting, because if you see this liquidity, the day is building up the liquidity for a short move, so you can exactly know the market will go short. Same pattern, liquidity build up, sweep took the liquidity. The market will induce the liquidity before building up of the liquidity. Same thing, if you see, same stuff over and over and again. This stuff get bored, guys, trust me, because same, it will induce, it will trap, and then it will go in the real direction. If you see, can you see the taps trend line? I have mastered these liquidities, many type of liquidities of the trend line. It's so simple. If you understand, you can just do this and take this type of sniper entries. You should just identify a trend line, a simple trend line where the liquidities are trapping. Simple thing, it happens every day in the marketplace. Simple, again trend line, boom, push to the upwards. Lot of liquidities will be there. If you see here, same thing, same shit happens every day. This was the trend line, this was the trend line. The trend line got manipulated exactly in the Frankfurt Open and it got pushed downwards. Exactly, if you see, this is a trend line. The sellers got getting trapped and huge buying pressure. The market dropped. If you see here, the buyers getting trapped. This is the order block for the confluence. Many times the order blocks having imbalances will work if these types of build-up scenarios. Sometimes we can predict the market 100% if the liquidities are like this. If you can you see this type of pattern everywhere? I have shown you 15 to 20 patterns, right? Every time before the reversal, these type of trend line liquidities will form. If you see, same trend line liquidity, same trend lines, because many retail people will use the trend lines and the highs and lows. So that's why the market manipulate those. Simple Same thing here guys, same thing. Equal highs, equal lows, those are the very clear type of the liquidity guys. You should not leave it alone. Many people think this is only liquidity. That's not true. These type of trend lines are the real liquidities. I used to think these are the only type of liquidities, but these are also very important. I have collected a lot of data from the past 5 years. See here, order block by the confluence, boom, choop. You can use this order block for the re-entry, choop. Lot of entries if you understand the algorithm behind the markets. Same thing if you see, it has done the build up. If we go to the 5 minutes, it will be a clear build up towards the downwards. Towards the downwards, a clear build up. Choop, entry. That's it. Simple things happen same every day. See, I'm not Chung, I don't know. These are some random days. Just same shit. Liquidity build up, choop, entry. Liquidity build up, choop, entry. Same shit guys. Simple. See, if you see, these are the equal lows. These are the equal lows that got trapped. Exactly time where Frankfurt opened, sweep, the market went up. This is the very important pattern. I am revealing my entry pattern here. If any guy is watching the video till this point, I will appreciate you. So that's why I'm giving you my entry pattern. This is my entry pattern in the 1 minute. Sweep. This is the build up. I wait for the sweep of the build up and I should check for the divergence. I use a divergence indicator to whether no the buyer's buying is getting strong. So I will buy if the divergence is there combined with this entry. If you see guys, if you see why I am telling you should have a confluence from the left, because if you see here, this is the build up. And also, if you directly take the trade from here, you will eventually take a loss. 100% you will take a loss. So that's why what I will do is I will use the confluences from the left. This is my important confluence from the left, breaker block. Right? This is the breaker block. If I move to the 1 hour, this will be the breaker block. Same thing. I will take the sell from here, covering the stop loss. I can take this whole fucking move. And you can ask, how can I take this buy? Same thing, simple. A trend line, draw a trend line guys, draw a trend line. And there is a order block confluence here which is having imbalance, sweet imbalance. That's it. I will buy. Simple guys, simple type of trading. Same thing, same shit every day, just different scenarios. Same thing if you see trend line, getting induced, because if you see same shit, there is no magic here. Exactly at the London Open, sweep happened, took the liquidity, aim for the opposite liquidity. That's it guys. Trading is not to be complicated. It's very simple. If you see liquidity, the trend line got grabbed, the market got induced, exactly Frankfurt Open, the market reversed. Same thing. This speed and aggression is also very important in the marketplace, because this speed and aggression suggests spoofing, because what the banks will do, and the banks will get fined millions of dollars because of this spoofing. It is not encouraged by the Fed, but the banks still do. What they will do is they will keep a limit orders here. If there are stop loss, if the people stop losses are here, let's example say the people stop losses are here, because they will sell here and they will keep stop loss somewhere around here, right? So they will have fake limit orders. If the market is approaching this area, they will remove the limit orders and they will sell again. So they take all this money, all this liquidity, and then they move it in the real direction. So they will sell here at the edge and move, take all this move. So that's why if you backtest, always the big moves come from the liquidity grabs. Liquidity is a very important thing. If you see here, same thing, same shit. Liquidity build up, sweep of the Asia session, order block confirmation, boom, entry. Simple thing. can show you number of examples if you want. Simple trend line, sweep, and this is the very perfect example. Perfect example, really guys. This is the perfect example. Trend line, sweep, choop. Can you see these black candles? Black candles. I have talking about the speed and aggression since past 1 year, because I am seeing if a sweep is happened with a big black candles, it means it's definitely a sweep, because the retailers will think if the sweep is happened with that much of strong bearish pressure, they will think this is the break of the structure, and the smart money will sell from here and stop loss is here somewhere. So that's why the market is reversed. And also I told you, every time if the market is reversed, this will be the pattern. This will be the pattern. Build up, sweep, inducement, real move. Same shit over and over again. Literally, this stuff gets bored, guys. If you do the same stuff, it will get bored, because it's simple thing. If you see how many trades we got, 1 is to 20 RR trades somewhere. So this is the video, guys, about the daily cycle. Hope you gain a lot of knowledge. So if you gain knowledge, please don't forget to share and subscribe to the channel. And also, if you want to join my mentorship, you can go through the comment section and join. Peace, guys.